Hey everyone, Dan here. We are about a half hour after market close on Wednesday, June 23rd. We're going to do our nightly look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also feel free to comment below with your own thoughts, opinions, ideas, questions, tickers you'd like me to cover. Any of those things are super welcomed and helpful. Also, there is a link below to a Google form where you can drop your email in if you want to be on the list for a newsletter that I'm not yet creating or sending out, but plan to in the coming months. And it would be like a once or maybe twice a week kind of thing. So I'm not going to throw a bunch of stuff in your inbox like I know some folks do, but it'll be more supplemental or additive to the videos. Okay, well, SoFi had a relatively good day today. I mean, nothing tremendous, but it is obviously a good step in the right direction. It did a really good job gaining and then holding support at this 2121, which we had charted for quite some time. And it also did a good job of holding this uptrends that we had identified in last night's video. And even then when it fell through, it caught itself at that 2121 level and popped right back up. So nice volume day today, a little over 5 million, so about 1 million more than the 3-month average. I think if we could, get that in the high single digits, closing in on 10 million, I think that's the sort of volume that I'm going to be looking for in the coming days and weeks. If this has the opportunity to run toward 25 again, I think, that would go a long way with helping usher that along. Let's take a little expanded look here at the chart. I should go 5 days. Okay, so, up here is the purple zone is the one that I'm looking for it to get back to as soon as possible. This green channel, it was in for a while, fell out, and then basically, we said we're looking for it to come in on top of this trend lines. On the 1 minute it's over this, but on the 5 it's under it. And then I'd put this purple box in last night, basically saying that if it falls through 2121, there should be a really good bounce zone there. Obviously this morning it didn't quite need to dip all the way down to like that 2080 level. It stopped about 10 cents short, but still have that bounce zone if needed. But I'm hoping that it can get up on top of this trend line and work its way up to that 22 level and then start to work itself from resistance to support there and carry on. On the indicator side of things, the RSI is just a bit over mid-range at the moment, so definitely nothing preventing more buying pressure coming in. And the MACD is having this sort of like bob and weave kind of herky-jerky action here with these just like very small areas in the histogram. I mean, even this one's not that like tremendously large. So sort of trying to pick a direction is what it looks like to me. It's continuously crossing over, a little bit of bullish momentum, a little bit of bearish momentum, so sort of like canceling each other out, and then just like nothing. So right now we have a slightly bullish crossover. We'll see if that can grow into anything significant. I mean, pretty unlikely in the after hours unless, some big news drops or something like that happens. While they're still trading in the after hours. But that's what I'll be looking for in the morning if it doesn't happen sooner. I guess that's all we can look at the moment on the chart side of things. So let's flip over to the data, see where we are. This we should go over really quickly. Obviously, the high short interest that we saw back in the days of IPOE is what has carried us through, has carried my videos through from those days to the present. And I've been harping on this for several days now. That's, the shorts, in my opinion, have continued piling into SoFi, and we just don't necessarily see that yet. Though I will show you some fail to deliver data. That's a commenter pointed out to me last night. But anyway, this went into effect today. If we scroll up here, basically this says this was, sorry, I'm going too far. Okay, yeah, so this was submitted by NSCC on March 5th, but it will take immediate effect tomorrow. This article was written yesterday, on Wednesday, June 23rd. So that's today. So we're just going to cut to the chase on this, but In other words, heavily exposed market makers like Citadel would have to cover their short selling bets within a day, lest they risk defaulting and have their assets frozen as outlined. This reads to me like they are sort of like strongly incentivized to close their shorts within a day, because if not, they risk defaulting. So yes, that might be a really, really strong incentive, and that might actually play out the way that it's intended to here. But it also says to me they don't technically have to. I don't think that like many of these funds are incredibly adverse to taking big risks. Maybe I'm wrong in that, but that's what it seems like to me. So, if it's just do this, or you really run the risk of something bad happening, maybe it'll have the impact that it's intended to, but I could see also just some funds accepting that risk and kind of continuing ahead. So the other sections here, this is actually pretty funny. Well, let me read this one first. Of course, the NSCC also has the authority to close any open positions of a defaulting member. Rule number 2 stands out in particular as it invokes Citadel's impressive list of FINRA violations. I just love that snarky tone, impressive list of FINRA violations. Very funny to me. With the new rule about to go live, the ability of market makers like Citadel to exert such market force will be greatly reduced due to their liquidity reduction. Daily down payment collection will tie up their available capital. That to me is actually the more important thing, because the other is just sort of like an incentive. Hey, don't do this. Close your positions out within a day, because otherwise you're putting yourself in a very risky position. That to me is sort of like, they could do it, they could not. This, the fact that it ties up their available capital, that's actually more, like in my mind, it has the greater potential of having the impact that it's intended to. So in turn, this translates to the reduction of open positions they can take, given all their other exposed short positions. So interesting stuff for sure, and the extent to which this will play a role in future bumps in SoFi or any other highly shorted stock is sort of like to be seen. I still think there will be a lot of taking and exiting of positions throughout the day, which is actually, I think, what we've seen a lot of just normally. So I don't think that actually changes that much. But yeah, it'll be interesting to see what this sort of exposes in the days and weeks ahead. That said, short volume ratio after yesterday's close, high 20s. So as we know, anything in the high 20s is really high. In the 30s is really crazy. So with this big bump in volume that we saw yesterday, along with it came the short volume. So still continuing to pile in quite heavily. Interactive Broker's feed has not been working today, unfortunately. Somebody had commented at some point today saying, Fidelity is showing a fee of 70-something%. Where are you seeing this 244? I'm seeing this 244 on iBorrowDesk, which has a feed from Interactive Brokers. Sometimes it goes down, like we're seeing right now, but you can see it right here. I'm not sure if they were looking at Fidelity today, and so that fee could have definitely changed from 244 yesterday, late in the day, to 70s at some point today, but I'm not sure. I mean, you did see this big jump up here during the day yesterday, so it can change quite significantly from 15 minutes to 15 minutes, or overnight, of course. So there's that info. Beyond that, if we stretch this out a smidge more, just to sort of like give ourselves a last little bit of context for what I'm hoping the next few days have in store for the bulls, just a reminder that 2506 support, though it feels pretty far away at this point, I still think that is our sort of like key here. I think that is sort of like the golden ticket, if you will. I don't know if that's really the right term. That would be a tremendously impactful task to surmount, or price to surmount. I think that unlocks a lot of potential that we won't see as long as we are sort of like fiddling around in the low 20s. That said, obviously you got to start somewhere. So regaining this uptrend on the longer term time frame, this is the 1 hour, and working yourself to that 22 supports. If we can get through these, mid 22s, that leaves a good dollar run room here. Obviously, this topping out has now sort of taken effect. So we should stretch this over because we should pay attention to that, which will sort of like come in just before being able to gain that 2361 support. But that 2361 is a really good zone because it's a really good jump zone. So I could see it almost kind of like rolling pretty quickly through that 24 zone if it gets a nice push off of 2361, because that was the initial bounce zone that we were looking at when it was doing all of this topping and bottoming out here. And then it just couldn't hold it. So I still think that that's sort of like a springboard, but first things first, even get ourselves up to this white box and see what happens. But a bunch of really good dip buying into price strength opportunities coming up, in my opinion, if we continue on the bullish side of things. All right, well, I hope everyone had a good trading day. I appreciate you watching and sharing and liking and subscribing. And that'll do it for this one. I will see you in the next video.